starting to see market volatility pick up. Certainly, we want to take this opportunity to bring in best practices, things we're doing for our clients on a regular basis or on your behalf on a regular basis as well. So let's kick it off with the first one, just because emotions are a big part of this. And I love this slide just as it kind of brings everything into consideration as we think about the cycle of the markets here.
Yeah, and we always say money is emotional, right? I mean, we understand these are, it's your investments, it's your hard-earned saving. You've often worked 10, 20, 30, sometimes 40 years to accumulate this. And when you see that fluctuate in the market, it doesn't matter what the current event is or future expected outcome, it can be tough. So as we look here on the slide, I think especially if you look at the last 3 to 5 years, we've definitely gone through the cycle of upbeat, confident, thrilled, and I feel like we've been spending some time in the euphoria zone as you think about some of the AI boom, some of the Magnificent Seven news, and even just general returns as you look at, across a broad basket of indices in the market.
And I think what's important to point out here is like this section down here, at the end of the day, that's, prices are high and that could be the riskiest time to invest. And it's usually the easiest time when things are really going well and things are high. But what's important is you think about this cycle, and what we do for our clients on a regular basis is, one, maintaining the integrity of the asset allocation, rebalancing, making sure that we're not overexposed to areas that have increased or too significantly, to make sure that we're maintaining that risk tolerance for the clients long term. Because obviously we don't know when, but things can turn. And when that turns and volatility picks up, you become a little bit nervous or even become panicked or scared. And that's when the emotions take over, and that may not be the best decision for the long-term financial plan or even the timing of the markets there as well. But as we look at this cycle, when things are so bad, you really feel just defeated. But the reality is that's when prices are low, and that's usually the best time to invest. So what's important here is making sure you do have a solid plan, and you're not letting the emotions control all of your investment decisions there, and making sure you're aware of this so you can make better decisions for your personal financial portfolio as well. Certainly, these are things that we talk a lot about and we experience, especially with clients on a regular basis. But it's important to just remember that money is emotional, and this all ties to making good decisions longer term.
And Neil, as if we think we're hanging out at the top of the euphoric zone, as we think at some point it's inevitably going to start to go from euphoria to startled, nervous, scared, what are some of the things that we do once we feel that emotional wave start to turn, whether it's new administration, trade policies, tariffs? What are some of those things that we reach out to do?
I mean, highly driven by what the investment team is doing on a regular basis, but that's where we can be overweight some areas, underweight, and certainly as those markets turn, there's ability to lean back into that. Let's talk about the plan and why this is so important as we look at that emotion that's tied to the volatility, and how do we help stabilize that?
It's all in the plan. And no matter if we're in the euphoria or more, start to panic and nervous phase, that's where we get granular and look at, how does it impact you and your household and your net worth? So we start to look at the balance sheet. It's where we want to make sure your balance sheet is updated. We look at the different qualifications in the balance sheet, where those assets are held, what's the profile of those assets, how are you saving, are we maximizing those contributions? Really those things that we can control. We know we can't control the markets. It's hard to control emotions, but we can control, where we're saving and how we're optimizing, those different buckets of your wealth, right?
Yeah.
And the other thing we like to look at is just your investment strategy, where again, the markets are going to do what they may, but your strategy is something that you're in control of with your risk tolerance, and then that's where we try to bring in our science and our research and our discipline to implement that and execute it on a long-term basis. So it's understanding what you own, what the purpose is behind each asset of that you own, and knowing what your risk is at the end of the day, and being comfortable with that, and knowing, are you taking enough risk or are you taking too much, and what's the purpose behind it.
And the other part of tying the emotions to the plan is ultimately we don't want risk tolerance to be cyclical, because when the markets are high and doing well, it feels like it's easier to take risk, right? Or when they're low, or markets are down, you feel like you want to de-risk. You don't want to be in the market. So what's important to be disciplined there and consistent, because that just creates way better outcomes. And it's always good to revisit that risk tolerance and at least make sure it's in line with your expectations. As we think about the plan, let's tie that to the final slide here. Ultimately looking at the longer term view. Because shorter term, When things are volatile, it doesn't feel good.
No.
But let's back out and start to look at the longer term view, and how do we go about doing that?
Yeah. So this is really the final view, and a lot of the individuals and families we work with are quite familiar with this view. We like to call this the guardrails, but really that financial health score of, based on what the markets are doing, good, bad, or ugly, and what you're doing, the things that you can control, like your income, your savings, contributions, and spending, how does that going to impact you and your family? And this is where we can model any amount of hypotheticals. Again, whether that's, do you want to retire early? Do you want to change your lifestyle? Or even some of the what ifs like inflation or market corrections or whatever emotional stage we're in. We're at least able to boil that down to a graphic and try to just give that clarity and peace of mind of, you're going to be okay.
Yeah. This is where it's really extending it longer term, and obviously short-term volatility is challenging, but measuring this from the longer term view just helps give some peace of mind. At the end of the day, it's not easy to see your money go up and down, but keeping that long-term view can really help, again, make good decisions, less emotional ones, and making sure you're sticking to your plan. So to recap this section, Mike, put a little bit of a list here together. What's one of or two of your favorites?
Yeah, one of my favorites that we didn't get to touch on is maintain an emergency fund. And especially as we start to turn to, either like panicked or just even sort of nervousness in the market, it's great to look at your accounts and know that you have either, money market, cash alternatives, short-term bonds, but essentially your living expenses and your lifestyle shored up for could be, 3 to 12 months if you're still working, or if you're a retiree in a decumulation phase, maybe it's 1 or 3 years of cash or cash alternatives on hand. So you can look at the news and say, okay, if the market's down 1 or 2 or 3% today, I have my living expenses covered for the next 2 to 3 years.
And then one of my favorites on here is, limit media exposure. I mean, certainly being informed and educating yourself is always encouraged, but understanding not only the sources, but also social media is extremely powerful for navigating information to be put in front of you. Those are things you just want to make sure you're just aware of. And don't be afraid to hit the mute button, as you referenced before. That's very important, because at the end of the day, that can also drive a lot of those emotions, and create a lot of anxiety. And if you're hearing something, or if you see something in the media, write it down, take a snapshot of it. Let us know. Like, we receive questions from clients all the time like that, to either debunk, validate, or just give our perspective on, because there's a lot of opinionated people out there, and certainly just want to try to help navigate through that. In addition, what we do through our videos from the Mike and Mike team ultimately is try to debunk a lot of those conversations, kind of weed through all the news media and really focus on the data, as that drives a lot of our decisions and brings to light, really what's happening out there from a factual standpoint as well. So that concludes our commentary here today. Thank you for joining us. Again, reach out to us if you have any questions. Otherwise, we'll see you next month. Thanks so much. Bye-bye.